Hey everyone, you probably already heard about the announcement for Broadcom to do a stock split. I know that's creating a lot of enthusiasm for Broadcom stock investors and those interested in Broadcom stock. But there's more going on behind the scenes that's causing the stock price to increase following the company's quarterly investor update. So I wanted to provide a little more detail behind the scenes on what's going on with Broadcom stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the reasons why Broadcom investors were so excited was because revenue is increasing nicely, even if you exclude the impact of the VMware acquisition. If you do include the impact, revenues were up 43% to 12.5 billion. But even if you exclude the impacts, consolidated revenue was still up 12%. And that was driven by AI revenue, which increased by 280% year over year to 3.1 billion. So not only did revenue from the AI segment jump by 280%, but it's now a more meaningful portion of the company's overall business, 3.1 billion out of 12.5 billion. Nearly 1/4 of the business now consisted of artificial intelligence business, and since that segment is growing much faster, it's likely to make up a greater portion of the company's overall business. Of course, investors are more excited about stocks that are benefiting from artificial intelligence, given that industry is growing so rapidly and it's growing much more quickly than some of Broadcom's other business, which is some of it is actually stagnating or declining. So the increase from artificial intelligence is welcome news for Broadcom stock investors. And we got more good news about the integration of the acquisition. The management saying that it's going well, that they're making good progress transitioning all VMware products to a subscription licensing model. And since closing the deal, they've actually signed up close to 3,000 of their largest 10,000 customers to enable them to build a self-service virtual private cloud on-premise. Now, this is important because typically acquisitions of these size are difficult to digest, but when you have a company like Broadcom that has a history of acquisitions and making large acquisitions that have demonstrated skill in this process, that helps make it better. It helps them learn and it helps them improve this digestion process, and it excludes waste. It reduces waste from these large acquisitions, which can be a big mistake sometimes when companies make these large billion-dollar, several billion-dollar acquisitions. The company going on to say that they integrated the SG&A across the entire platform and eliminated redundant functions. This is integrated selling, general, and administrative expenses. The general and administrative expenses in particular can be redundant when you acquire a company, right? You don't need two board of directors. You don't need two CEOs. You don't need two finance departments. And so you can integrate and eliminate some of those functions and thereby increase the profitability of the business that you acquired. And that's precisely what Broadcom is doing here. So spending run rate at VMware is falling to 1.6 billion this quarter from what used to be 2.3 billion per quarter before the acquisition. And they expect spending will continue to decline towards 1.3 billion exiting Q4, and then it'll stabilize around 1.2 billion in the end. So they're going to take a company that was generating 2.3 billion on costs and bring that down by roughly half to 1.2 billion. And this is why you sometimes see companies make large bids for acquisitions that are well above the market cap of the company. Sometimes you might hear a company makes a bid for a stock that's trading at $10 per share, and they'll make an offer at $17 per share. You might ask, why are they making such an overbid asking price here? And the reason is because they feel confident that when they acquire this company, they can eliminate some of these costs, and that company, the acquisition, the business that they're acquiring, will actually become more profitable because they'll be able to eliminate some of those costs. They also might eliminate competitive pressure because sometimes they acquire a competitor or sometimes they acquire a supplier, And so there are strategic benefits to these acquisitions that enable companies or acquirers to pay more than the asking price or more than the market price. But a lot of times they still overbid, they still overpay. Few companies, and Broadcom is one of them, that are able to make acquisitions effectively without overpaying, absorbing them effectively, bringing it in. And Broadcom has a history of doing this effectively. And it looks like this acquisition of VMware is going to be another case in point where the company makes a good decision. So VMware revenue in the Q1 was 2.1 billion. That grew to 2.7 billion in Q2 and will accelerate towards 4 billion per quarter. And that's because they're going to integrate it with the existing business, sell VMware products to their existing customers, which they're already making great progress on. And therefore, they expect operating margins for VMware to begin to converge towards that of classic Broadcom software by fiscal 2025. And Broadcom's long been one of the most profitable companies in the world, excellent operating profit margins, and it's great to hear that this acquisition, the revenue from this acquisition, this segment will converge towards Broadcom operating profit margins by 2025. So it won't bring down the company's profit margins. It'll actually supplement their operating profit margin longer term. So networking revenue in the second quarter of 3.8 billion was up 44%, and it now represents 53% of its semiconductor revenue. That was again driven by strong demand from hyperscalers for both AI networking and custom accelerators. Now, these hyperscalers include companies like Amazon in Amazon Web Services, like Microsoft for its cloud business, like Google for its cloud business, Oracle for its cloud business, and all of those companies that I just highlighted have signaled that they're going to increase spending this year by the billions of dollars, and then again next year by the several billions of dollars. And so this category for Broadcom will likely benefit on that strong tailwind from hyperscalers that are really looking to build out their networking, their AI factories as they're now being called. And that's really going to be a boom for Broadcom in this business segment. So you can start to understand a lot of the reasons why investors were enthusiastic about Broadcom stock. I would say the impacts from artificial intelligence and the progress with the integration of VMware have more to do with the increasing stock price than the stock split. I know the stock split might be exciting for retail stock investors, but for more professional investors, institutional investors, these factors were more important than the stock split. The fact that they're able to bring this acquisition in with billions of revenue, now increasing the amount of quarterly revenue run rate for VMware and reducing the costs at VMware by roughly half. I think those are great developments that investors are very enthusiastic about, and you can understand why the stock price is up by so much following these announcements. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.